Alright traders, George here, and time for an update on the S&P futures. Last I left you looking at the S&P fading in the low 1700s and breaking into this air pocket here. The 45 to 48 and the 27 zone were the two main areas I was looking for to act as support to this bullish impulse here. Remember, this swing low, this is retesting the April 2000 S&P highs as support. We went to new all-time highs after we bounced there, then we faded. So pulling back, pretty heavy institutional commitment zone here, but it's even more so now that we've made it out of there. The last time you looked at this, these two balance beams were split. There's been so much trading in this zone here that they've sort of fused together. I did mention that there would likely be a lot of noise, sort of a battle around this area to find that support, but ultimately the bulls cleared back over and started to move back through the air pocket, and you can see how quickly they did make it through there. Okay, so no surprise to see it at 1700 in Globex the other night, right? You were looking for it, you heard about it in advance, and you were prepping for it. The traders that had the hardest time were the ones that shorted over this balance beam ceiling here, going right into the air pocket. That's pretty much the kiss of death. Where we are now is we had a good rally day for the most part, but then we started to fade back. So we've pulled back into this upper balance beam zone here. I've got it tagged at 1674 to 1694. This will be a zone to look to see if it can act as support for this recent rally and to see if the bulls can keep it north of 1700. Now if we break below 1674, that's back into the air pocket, and then 1658 is the number one target below, and then same guys down here, the 45 zone, 27s and 13s, okay? And with the recent trading activity over the last several months, I wanted to balance out some of the older targets with some of the newer information and see if I needed to make any changes, and I'll show you what they are right now. So north of 1700, the two main zones that I'm looking at are 1738 to 46 and 1773 to 1777. And those are my two primary targets in the next 100 points north of where we are. I'll give a nod to 1755. And I've tightened up this zone around 1800 to a 10-point range, 1798 to 1808. So with the bulls keeping it over 1700, there is no overhead resistance. But where we are right now is we could see a little bit more of a battle in this area, and really the way to gauge it is to watch price around 1674 to 1694. Here we are Monday after hours, and we're at 1690, so we've already broken into the top here just a bit, and we've got some heavy econ news coming up this week as well. So this will be a great test for the market to see if they can stay north of that zone, to see what kind of volatility might occur. If things break down, will the bears be able to make it stick? Closing below 1674 would be the first red flag. If we break below 58, we're likely going to 45-48. If we get below 43s, then we're going to see 27, and below that down to 1613. Those are the immediate targets to the downside, and these are the immediate targets to the upside. Ultimately, the balance beams show me where the institutional commitment is, so I know where the big houses have gone long here recently, and I don't know how long they'll be going long, but it's an area to watch to see if it becomes undone or not. That'll do it for now, and I'll see you back in the live room.